Hey everyone, Ken here from the Dyslexic Investor, and we're going to be looking at retail stocks today. Again, a retail stock could be anything from your Target, your Walmart, your Nordstrom's, your Macy's, the discounted realtors, your TJ Maxx, any one of that really basically falls in the bundle of basically being able to any kind of company or brand that is basically a mall based. You can kind of just walk by. A lot of them, if you've seen in the past, have kind of gone with the wind. But we're going to hear talk about what we think or could look at and understand better markets here. So first and foremost, we're going to be looking at our XRT, which is a spider ETF that has all the retailers in it. So by all the retailers, it has all the retailers. So you can see here on the trend, it is way below the 200-day moving average. That is the white line there. So that is significantly showing, aka oversold, downtrend, whatever you want to call it. Let's see. Like XRT has everything from your Dillard's. It actually has the Amazon in it too. I didn't know that. Rite Aid. It has Guess, L Brands, Abercrombie, Best Buy. So basically all these brick and mortar stores that you see when you're driving down the street and so forth. And Dick's, CarMax, Bookings. Okay, interesting. Right. Alright, so looking at this, you can kind of see here at the top here, again, this is the yearly chart, is 52.96. So that is, nearly $10 lower. So let's actually go further out to get a better picture here. Okay. I've seen this had an all-time low nearly this time last year. Hit a really low at 37.5, 37.52, 72. Then we had 38 over here, and this is somewhat promising. This is on the weekly chart here of showing lower highs or higher lows. So higher lows. So this one is of course lower, but this is the higher of the lows, and it's making its way through, and it's about hopefully going to cross the yellow line here. Again, this is the reversion to the mean, and overall, like, these markets have been struck by so many issues with lack of sales, the economy changing on. You can just basically get everything from your phone now, aka Amazon. Amazon makes up like 45% of all the retail stuff selling, and how much I read that they take up 10% of the box market of the physical boxes that are sent in the world, like maybe United States. But that's a lot of boxes. Like, they're huge users of boxes due to the shipping and the ease of it. But looking at this overall, seeing a significantly, this clearly right here, this downtrend that you see here coming through here has clearly been somewhat broken. Again, but it didn't break above the 200. It did stay above the yellow, but then beginning earlier this year, it kind of just fell apart a little bit, and then tried it sideways, and then probably more China tariff stuff, it just took it all the way down, and it's slowly recovering compared to other things. So let's just go ahead and look at like an Amazon, aka the king of retail. You see here, it did have that downtrend towards the end of the year, like everyone's stock did, but it had significantly higher highs, and breaking the trend. This again, the tariff wars here, and took it out all here, almost getting to an all-time high of 2050 which is only 20 points away. So this is significant sign of the reversal and the opposite of what the retailers are showing. Let's then look at it like a Macy's. Everyone knows the Macy's. If you've been to New York, that Macy's store is fantastic. That's probably the only fantastic store they have for Macy's. But you can kind of see here, trending down, trending down. This hasn't broken this trend line here at all. It's trying. It really is. You can kind of see here on the RSI, it's hit below 30 here on being oversold. But guess what? It's still going down, and it's maintaining this. Not really much momentum to the upside to push this guy higher, sadly. This is huge misses with China. Earnings report's not going great. You can kind of see here, these are the earnings right here, and just constantly just going down, earnings after earnings and earnings, just not making the numbers. Poor retailers, right? Well, let's take one more look at compare. I want to compare this to something that everyone, like a Walmart. So Walmart and Amazon are not the same. Walmart started out as a brick and mortar and have slowly revamped the way they do things. They made a great e-commerce sales for users and so forth. You can kind of see here, and that's shown. Like, they literally hit an all-time high this week due to the fact of literally yesterday. Like, this is fantastic. Like, again, this is where the last one last year just kind of went down and never recovered for the retailers. But again, they came back. They always stayed above the 200 here. This is the teal dotted line here, and they stayed above the blue, yellow line, and they've been climbing higher. Like, this is extremely. You can see here on the RSI, this is like overbought. Like, this is way overvalued, but it is literally has changed everything that it's done. It's paying their workers more, giving better prices in the sense of online, creating an online marketplace for customers to purchase from. Changed and revamped their stores, and they bargain so hard with their vendors on getting the best prices for their customers. And you kind of see here, like this little top here on their earnings report was great numbers, but it kind of came back to the yellow line. And then it kind of broke through it a little bit, and then climbed higher again, testing it. So that it had to touch it once, touch it twice, and then over here it broke through it. Boom! Fantastic, beautiful looking chart. And relative to the S&P, hit an all-time high yesterday as well. This is actually recorded Saturday, on Friday, and you can kind of see here, it touched here once, touched here twice, and then broke out much faster than other ones, but still printing higher. Like, none of these moving averages have crossed. Like, these are all beautifully parallelly stacked on moving forward. And again, like, we are still waiting for the China tariff wars and things like that, but there hasn't been much said regarding that. But thank you guys for watching. If you have any questions, you want to review any stocks, put it down below. I would greatly appreciate it. Again, this is Ken signing off. Peace.